السلام عليكم ورحمة الله. بسم الله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday, the 6th of October 2024. I'll be doing the weekly market review. So starting with the XY, here we have the weekly time frame chart. As you can see, we've seen a reaction after taking this sell side liquidity. Now I was looking for an over pretty much a run towards this sell side liquidity right there, and just below that sell side liquidity you have a fair value gap. You can go to your charts and you can check it out. Now after price has reacted here on this week, just for your info, we had an FP on this week, so that's why we're seeing this kind of movement in the markets. After we traded up higher and closed above this weekly fair value gap, now it makes it a weekly inversion fair value gap. Now looking into the next week, if we really want to see pretty much shift in the program from sell program to buy program, I want to see price just pretty much never close on daily basis below this level here, which will make an immediate rebalance to pretty much propel price to trade up higher. It's like a launch pad or springboard. So we have this very favorite gap, and we have this also favorite gap that I'm looking at. We might see some support at this level. Now, this is not a panacea, this is not be all end all, because I'm just following what the market is giving me. And one more thing, that the markets are now following the seasonal tendencies. Now, if you're subscribed to any kind of services, you will check that you check your seasonal tendencies, that at the beginning of October or by mid-October, we'll see a rally in the DXY, or also known as the US dollar index. And as seen in the DXY, we'll see a diametric opposed move in pretty much the forex market that starts with the foreign currency, such as your USD, pound USD, etc. So for that case, the other currencies that saw with the foreign currency will start seeing some lower prices, which what we'll be explaining and discussing later on. But anyway, now we can see some retracement here towards this favorite gap here, this area, and over movement here. Like if it wants to really trace deeply lower, we have this level here, which is the high of this weekly candle, which will make an immediate rebalance. Now, preferably, I don't want to see it being filled out. I want to see some of that gap be created. I want to see a favorite gap forming here, which will be a breakaway gap. Now, I'm not going to be explaining every channel that I'm talking about. You can go to my mentor's channel, my mentor is ICT, Michael G. Huddleston. I was blessed to be mentored by this guy. So anyway, you can go and learn from him the terminologies, everything about the markets, and how you can read the markets and the footprints of the smart money or the market makers that are pretty much just hidden in plain sight. So going to the daily time frame chart, we have this daily fair value gap, as you can see, which is just below this fair value gap. If price want to pretty much retrace deeply down lower, we have this fair value gap, and just below the weekly candle high, which is what I've explained here, we have this fair value gap. So price can overshoot towards this fair value gap, but never closing below this level. And then if it wants to run up higher, this will be a market maker buy model, where we have the original consolidation, distribution, redistribution, and then smart money reversal here. And then we'll be trading up higher towards to clear out these highs, and above these highs we have this high also. So that is going to be pretty much it for the XY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see on ES, we have created and formed the relative equal highs here, and we've retraced towards this favorite gap at busy by side imbalance sell side inefficiency. So this is inefficient with the sell side delivery. We've seen retracement here last week to make some of that area efficient. So now theoretically this area is now from this candle's high to this candle's low. The space is trimmed down lower, but it's always better to keep the original fair value gap in play and pretty much marked down. So as you can see, we're like treating this buy side liquidity as a kind of a resistance that turns into support, but that's not what I'm trading, but this is just what I'm spotting to draw your attention towards. So I've marked down the consequent quadrant of this discount wick. Now, just an information for you. Whenever we're trading and there's a wick above us, any wick above us, above the market price at the moment, is considered a premium array, a premium wick, a premium, whatever you want to call it, whatever big array that you see above the market price is considered a premium array, a premium level. And the same thing would be mentioned, anything below the market price at the moment would be considered a discount array or a discount level. Now, at this point, since we close here on Friday, so anything below it would be considered a discount array. Now, this consequent cosmic is a discount, consequent cosmic of this discount wick and etc. So now going to next week, if we see a retracement and we've seen the price respect the constant cosmet of this discount wick, I'll be looking for higher prices to attack these relative equal highs. Otherwise, it might dig down deeper towards this bullish order block. So going to the daily time frame chart, you can see that it's kind of starting a consolidation here after taking out the buy side liquidity, which is absolutely fine. And this is a signature in price that you want to pretty much be expecting whenever we hit a drawn liquidity or a level that that been waiting for some time to be hit. And after that level has been hit, you'll see some kind of consolidation. Now, this usually signals to me that this is a consolidation that pretty much shows other people that this is a retail pattern to trade down lower, whereas for me it's like a continuation to the upside. Because if price didn't react from that after taking that buy side liquidity, if it didn't react and start trading down lower sharply, that means that there's still it wants to pretty much consolidate, take more sell side liquidity that is residing, probably reach this liquidity void, and then rerun up higher to take out the buy side liquidity. So it's like it's not done with the buy program, it's not done with the seeking buy stops. So if it's really enough, it's really like pretty much had enough with the buy stops, seeking buy stops, it would just take out the buy side liquidity right there and just sharply trade down lower. So this is not how the market will be forming a high. This is not how the market will be creating a top in the market. So I'll be expecting a continuation to the upside. We have these typical highs here. We might take them out next week. We might just now we can trade next week on Monday and take them out. And for the next like the rest of the week, Tuesday, Wednesday, Thursday, and Friday, we can just keep trading down lower, taking on the sell side liquidity and reaching towards liquidity void. But we can do the opposite by Monday trading down lower. We're forming a high, this high, and these highs by trading down lower, taking out the sell side liquidity, reaching to this liquidity void, and then by Wednesday or Tuesday, we'll be forming the low of the week here, and Wednesday, Thursday, and Friday, we'll be attacking the buy side liquidity here. So there are two scenarios, but we're still in a buy program. You know, we never try to deviate from the idea or try to pick the top or the bottom in the market. Whenever the market's trading higher in a buy program, as you can see here on ES, you don't try to pretty much be clever or try to get ahead of the move. So just be along, just follow along with the markets and how it's trading. So if it's trading so if it's trading higher prices in a buy program, you don't want to be to get ahead of yourself and say like this is the top of the market and now I'm going to be trading shorts, etc. Just trade what the market is doing, and later on once price tells you, and it will be very very clear when prices wants to pretty much reverse, it will be very clear that we have a shift in the market structure. And also one more thing for you to just help you determine that, you know, like look at the seasonal tendencies. Seasonal tendencies like a roadmap that will help you a lot of times when you're trading the markets. So it's like not a panacea, it's not a be all end all, but sometimes and many times actually it will be following what has been done in the past. So history is a gold mine for the people who has the eyes to see. Anyway, so I think that's going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, price is just pretty much stuck in this area as it's consolidating. We've traded to this fair value gap. After we traded to this fair value gap, I was expecting a run down lower towards this fair value gap, and we've seen retracement towards this fair value gap right there, the busy buy side imbalance, sell side inefficiency, It is from this candle's high to this candle's low. Now, after we've seen this retracement towards that BSC, we've seen a reaction from it and we've formed a long discount wick. Now I'm looking at the midpoint, or also known as the constant approximate of this area of this wick. I want to see price on a daily time frame chart pretty much respect that level as support and just deviate from it and run up higher towards this buy side liquidity, the rejection block here, and the buy side liquidity. So going to the daily time frame chart, you can see how price traded down lower, took some of that sell side liquidity here that's residing, and then we've seen some reaction. It's pretty much consolidating. You cannot tell much about the movement that has been done, but we can tell that from the weekly time frame chart, we opened, traded down lower, filled some of that fair value gap. So it's like internal range liquidity that has been met here. Now the next target would be the external range liquidity, which is this high right there. So roughly about the 20,500. That would be roughly the level that I'm looking at, or the 20,550. And then later we might see a retracement. We might see it can just run higher towards this level, which is about at roughly 21,000. And yeah, so we're still in a buy program. I'm not gonna be trying to pick a bottom. Sorry, I'm not going to try to pick a top here on NQ or the indices, since it's not professional to do so. I'm not trying to get ahead of myself. I'm just trying to catch the next possible and the most probable move. So that's going to be pretty much it for NQ. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. As you can see, we took out the buy side liquidity the previous weeks right there, and we've seen a sharp tank down lower, taking out this low. Now, from this moment, comparing it to pound USD, which I'm going to be showing later on, pound USD didn't take out this low, so this could be just a stop rate, taking out sell stops before rolling up higher and taking out the buy side liquidity. But this, like just to keep a last line of defense, I'm looking at this level here, which is the last week candles low, to pretty much, if it wants to trade up higher on a daily time frame chart, I want to see it being pretty much treated as resistance here, to not let price close above this level and continue trading down lower. We have this rejection block right there. So going to the daily time frame chart, you can see that we have a bearish breaker now, a high, a low, a higher high that has been taking out these buy stops here, and then we traded sharply down lower below this low. Now, this is a tip for you, just if you're trading the breakers as I'm doing. If you're trading the breakers, you know, look at the swing that formed the breaker. Now, what is the swing that's just pretty much previous the previous swing that formed the breaker? Now, this swing formed the breaker. Before this swing, we have this swing that took out the buy stops. We trade the breakers, obviously. This is the breaker, all right? But if there is, you look pretty much, you look deeply into that swing here, and you look for any fair value gaps. This is where it gives you the pretty much very, very, very limited drawdown entries. So we have this fair value gap, this candle is low to this candle is high, that fair value gap right there. This is what I'm going to be looking at to be entering. I'm not going to be trading the breakers, because I've been taught and I've been seeing this in the charts many times. Now price might run up higher here towards this bearish breaker here, and then it can see some retracement, some reaction here, and trade a bit down lower. But this is just a run down lower to pretty much indulge a lot of people to trade down lower, and then for them to trail their stop loss just above this high. Later price will run up higher, trade to this level, which is my desired point of interest area to be trading. So pretty much ideal, I'm going to be setting a a limit order here to sell, and my stop loss order will be somewhere here, residing here at this area, the consequence of this premium wick. Now, this is not by any chance an advice for you to trade. This is just my honest opinion of what I think the market is doing. It's just a tip for you that whenever you're trading the breakers, look for a fair value gap in that swing. And if there's a fair value gap in this case, in this area, trade the fair value gap and fade the breaker, because the market is many times you can put some entries here at the bearish breaker, but many times you'll see that price will even retrace deeply into that fair value gap, and then it will start running down lower. Before that, we will not see any retracement or any placement down lower before we trade towards this fair value gap, because price, now look here with me, we pretty much trade from premium to discount and from discount to premium. When you're trading shorts, you want to place your shorts in premium and take the profits in discount, and vice versa. When you're bullish, you want to take longs in discount and take profits at premium. So it's just pretty much trading as if you're trading goods, if you're trading houses, if you're trading whatever you're trading. You don't want to buy a house that's really been selling in premium and the prices of the houses are pretty much expensive. You won't see, and you want to wait for prices of the houses that you're trying to pretty much buy to pretty much drop down lower a bit, so it's now in discount, so you can buy them. And if you're trying to make profit of them, you'll be waiting for some time for them to get in premium. Will be a lot of demand on these houses, whether it's depending on the city, depending on a lot of factors, but regardless, once it reaches the premium, you'll be selling back what you bought. And the same thing when you're trying to short, so as I mentioned. So when price is traded down lower, now let's say we started a sell program, which is will be confirmed by next week. So if we actually started a sell program from this high to this low, this is the discount. You can see the discount is the weekly candle low that I've pulled out on the weekly time frame chart, which is this candle's low. So this candle's low is the pretty much the midpoint, the 50% level of discount to premium. So that's here. Above this level right there is premium, and below it is discount. So if you're trying to go short, would it be ideal for you to go short in premium? And premium is just in this area. So what do we have in this area? We have this fair gap, we have this inversion fair gap right there, we have the bearish order block. There's a lot. You look for BD arrays that are residing in premium, and based on those BD arrays you take trades. You don't take trades because you're afraid of price, that price is going to be moving without you. That's just reckless trading. You want to see and you want to wait for price to pretty much retrace for the areas that are you are interested in. So if you're interested at this area, you just want to see price retrace to the area that you're trading at, or that you're interested at. And then once price reaches there, you can take some trades and then look for a move down lower, and you can take your profits. But otherwise, you cannot be reckless, you cannot be impulsive by just trading like some people. Just based on this video, they will just go into the markets, and by Monday maybe we'll be opening here and they'll just be selling here. Now the difference between selling here and selling here is just like about 100 pips or something like that. So this is where the winners are different from the losers. You know, uh, the people who are trading here just out of reckless trading, and they're just being impulsive. They will just be trading here and they will just have their stop loss very wide, somewhere around here, and they will pretty much try to just trim their stop loss along the way. And with time, just a few hours, they will just fuck up the whole plan, and they will just pretty much trail their stop loss very tight, that the market will just take them out when it's just reaching towards this favorite gap when I'm actually trading and going in. And then we will see a very sharp sell down lower to take out these sell side liquidities. Now all of this can be changing because, as I've mentioned, we cannot confirm the sell program until pound USD start having lower prices. Now that's going to be pretty much it for Euro USD, or also known as the fiber. Going to pound USD, also known as the cable. As you can see, this is a weekly time frame chart. We took out the buy side liquidity right there, but we were very shy from reaching towards this favorite gap right there. That's SIBI. Sell side imbalance, buy side inefficiency. The wicks are just forming just below that favorite gap, and we've seen a retracement here, sharp retracement touching the DIBA favorite gap here. We did not take out this low yet. So going to the daily time frame chart, as you can see, we on Euro USD we took out this sell side liquidity, this low here, but on Pound USD we still didn't take out this low. So this could be just a smart money tool that, or just an SMT, where Euro USD has formed a lower low, this low and lower low, where DXY have formed, since Euro USD formed a lower low, DXY formed a higher high, and Pound USD failed to make this lower low. Now, what does this mean? This means that it is one thing to have higher prices, but now next week, if it price trades down lower below this low, this just confirms to me that we are starting the sell program, and now we are in sync, because not just this is what confirming to me, the seasonal tendencies are confirming to me that we are expecting in this time of year, we're expecting some kind of sell off in the foreign forex market, such as Pound USD, Euro USD, and in the XY, we're expecting a rally. So this rally will be starting from October, which would be at the time of this recording, by early to mid October to mid December. So from all this period, we'll be expecting some kind of a rally in the XY, and it's going to be diametrically opposed in Pound USD, Euro USD, any forex currency that start with the foreign currency, any forex pair that start with the foreign currency. So, and for the currencies that start with DXY or the USD, such as USD yen, etc., you will see a rally, just what the DXY is doing. So I know this could be a complicated topic to talk about, the forex market, but it is, to me, it is the most, it's the ideal pair, it's the ideal market for me to trade, based on my geopolitical location that I'm located at right now, and how my schedule is going. So I do trade sometimes the indices, but based on my schedule and based on my day-to-day schedule, the forex market is my ideal choice, since it allows me to pretty much look at the markets at the areas which, at the times of which I want to pretty much tape read and sometimes trade the markets, trade the forex market. So as you can see, price can retrace here to this daily fair value gap, the CB. Above the CB we have this CB, also the deeper CB, but ideally just want to see price just pretty much trade down lower below this low here. Once we trade down lower below this low, I'll start looking for lower prices here on the Pound USD and Euro USD, and higher prices on DXY. And this will be according in accordance with my seasonal tendencies to see higher prices on the XY and lower prices on other forex pairs that starts with the foreign currency. So I really hope you found this one insightful. I know it's pretty much a long weekly review that I've been producing, but I want to just pretty much share my experience with you, have my experience documented just for the future. So I really hope you found this one insightful. If you have any questions, or if you want to go over any of the information, please don't hesitate to message me on Twitter or X, or you can join our Discord server. The link is in the description below. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.